What's next for retail investors? Robinhood CEO shares his vision and discusses how retail investors are navigating market volatility, crypto regulation, and the future of trading. Stay to the end as Tenevs also discusses the crypto's evolution, prediction markets, and Robinhood's role in the next wave of financial innovation.
First through the nation's banks and card network giants. Are you shivering?
No, the world didn't change for us at all on that day. We've been embracing and building for years, preparing for this moment. The Genius Act has now passed the Senate, as you know, and is expected to pass the House. I think that'll give regulatory clarity to stablecoins. And we've been embracing stablecoins. We've been enabling people to issue Visa credentials on top of stablecoins. We've been modernizing our own settlement infrastructure with stablecoins. And we have a whole host of innovations that we plan to deploy around the world embracing stablecoins.
All that I know is true, and there's ample evidence of that and terrific decks about it. But just to continue the journal's bill of particulars, stablecoins could allow merchants to circumvent traditional payment rails, which could cost them billions of dollars in fees each year, including the interchange fee that they pay when customers make purchases using cards. Again, this is a sense that you are a needless middleman. Could you explain to people why that may not be the case?
Jim, payments, you need three things. You need trust, you need ease of use, and you need scale. And the reason why we have close to 5 billion Visa credentials around the world, the reason why we have 14 billion Visa tokens around the world, and the reason why 150 million merchants around the world depend on Visa to grow their businesses is because nobody does that better than Visa. And if stablecoins become a mode of currency that people want to embrace around the world, we will enable that on the Visa system and scale that to those billions of endpoints. That's what you need to do well in payments. That's what Visa does better than anybody in the world.
Okay, I just want to be sure what people know where I'm from. This is a show about trying to figure out the investment opportunities, and I think it's ridiculous that your stock fell this much. I need you to know that. And the reason I say that is because every year there seems to be something that's supposed to knock you out. Buy now, pay later is supposed to knock you out. Block was supposed to knock you out. PayPal was supposed to knock you out. Erica was supposed to knock you out. Venmo was supposed to. I mean, everyone tries. Why don't they succeed?
What they've done is they've found the value in the Visa stack. To your point, if you go back 10 years, there was big tech, there was fintech, there was BNPL, there was the first wave of crypto, now stablecoins. What we have done is we've opened up our stack and we've given all of these players the ability to scale whatever it is they're doing globally using the Visa ecosystem. You know, you just had Vlad on Squawk before me. Robinhood has a Visa card. Many of the fintech players that you travel up and down kind of the Bay Area out here, Visa's become their most important partner in scaling their business, and that'll be true with stablecoins as well.
So, Ryan, it's David Faber. Do you believe then stablecoins are going to be a significant way that people transact in the future?
Hey, David. We think there's product market fit for stablecoins in three areas. The first is the capital markets use case, and you've seen that with crypto trading, and that's true globally, here in the U.S. and around the world. But the product market fit that's most interesting going forward is outside the U.S. And there's two areas. The first is countries where you've got high currency volatility or currency controls, where people really want to have access to U.S. dollars, and they either can't get U.S. dollars or it's very expensive to do that. Stable coins provide an opportunity for people in those countries. Maybe there's 30, 40, 50 of those countries around the world to have easy, cost-efficient access to U.S. dollars. And we'll plan to give them Visa credentials on top of those stable coins that they can spend in merchants around their country or other places. The second area of product market fit is cross-border. And that can be remittances, person-to-person, or business-to-business transactions. And in both of those areas, those are additive opportunities for Visa, and we're embracing stable coins and building and innovating on top of them to provide new use cases in those areas. Right. I think there's a little confusion because most stable coins are U.S. dollar denominated, people immediately think about use cases in the United States, when I think most people who studied this and are active in this really understand that the product market fit is outside the U.S.
True, and I'm aware, obviously, I think you've had a partnership with Circle, for example, for some time, 5 years. But I do wonder, Ryan, if Walmart and or Amazon were to create their own stable coins, given their enormous market that they control, would that not be a threat to you in some way?
So essentially, stablecoins are digital dollars. If you go on to Walmart.com or Amazon.com today, first of all, you have a wide array of ways to pay for things. Jim mentioned lots of them earlier. But you already have the ability to pay with digital dollars on both of those sites today. You can pay with your checking account or from your savings account on both of those sites today. It's places around the world where people want to be able to pay with digital dollars, and they don't have that opportunity today.